What's good, guys? It's your boy Ra Ray back with another very special, powerful video. And in today's video, I want to give you guys my market expectation, not just my stock market expectations, but the global economy expectations, right? And even my real estate expectations. And the reason I wanted to do this video, most importantly, was because I got some moves that I plan on making to kind of navigate the economic landscape that we're currently in. And I want to talk to you guys, my subscribers, openly about those moves, because as elite millennials, we are always moving forward. We are always planning and plotting on our next move to make our next million, right? Or for some of us, our first, like for me. But that's what I'm on this channel for, to inspire and to, essentially walk the path with you guys as we move towards success, right? Earning more money, expanding our lifestyle, right? Traveling, having amazing relationships, all those things that we value and living that high level life. That's what I want to bring to you guys in this channel. So I want to kind of talk to you about the current economic landscape, what my expectations are for that, and how I'm kind of navigating my stock portfolio, and also how I'm planning to be moving within the next couple years or so. So let's get right into it. Before we get into it, please guys, like, comment, and subscribe. If you are an elite millennial going after your goals, seeking to be and will be the first multi-millionaire in your family, this channel you want to subscribe to, because I post all things business, all things finance, all things entrepreneurship, and all things fucking crushing it. So like, comment, subscribe, and let's get right into it. All right, guys, so before we get started, I do want to mention that I did just recently take the CFA Level 1, okay? I recently took the exam, actually last Friday, right? So just a week ago. And mind you, I spent 8 months studying for that fucking exam. It was really a challenge, just the studying really, but the exam, honestly, I think I did pretty well, right? So I get my results back in 60 days. I'll be sure to let you guys know. But for those of you who watch my channel, who are working in the financial industry, you guys know the CFA is a very important exam, right? It's a very well-respected certification to have, the CFA charter. So this is big for me, and just like all you other elite millennials out there, we're always constantly moving towards things to increase our earning potential and make us, fucking legends, bro, to fucking live the life that we want to live, make the money that we want to make. So I want to share that with you guys. Just took the exam, get the results in 60 days. I will let you know how that goes. In regards to the topic of this video, and excuse me if I start sweating because it's kind of warm in here. Once again, I want to give you guys my market forecast, right? And how I'm kind of positioning my stock portfolio. And also, one of my goals is real estate, right? So buying my first investment property within the next couple years here. So I kind of want to let you guys know what my expectations are in the real estate market and how I plan on navigating it. And if you can take something from it, awesome. If you got a better idea, share below in the comments. But first off, getting into markets, right? As you guys know, the financial markets have been an absolute fucking up and down seesaw so far this year, right? Since January 1st, right? Which is kind of when all the bullshit started with us, also, with Russia and Ukraine and a war that put a huge burden on the market, on top of, the pandemic and like us just barely coming out of this pandemic, right? And things just starting to open back up. The Russia and Ukraine war took a huge toll on stock market performance. So it's been really crazy since then. And not only that, but something I really want to highlight in this video is the Federal Reserve raising interest rates. That's also been a huge topic, right? A huge topic, because that affects not just guys who are investors, right? Not just information-based investors or speculators, right? But it also impacts the everyday consumer. So that's the first thing on my list here. I got a little notebook here. My first thing on my list is the rising interest rates, okay? And one thing that we know about rising interest rates is when interest rates rise, everything becomes more expensive, right? Things tend to become more expensive. Mortgages, credit cards, you name it. Anything that has an interest rate associated with it becomes more expensive, and it really puts a burden on consumers, right? And typically the only times that we see the Fed raising rates is when inflation has already skyrocketed, which is what we're seeing right now. Inflation's been the highest that it's been since the 1980s, right? It's been absolutely crazy. So to combat that, the Fed's obviously been raising rates. Now, I know that when the Fed raises rates, the economy tends to contract, right? When the Fed raises rates, it's all to essentially curb demand because inflation's kind of run rampant. So I know and how I'm kind of navigating the rising interest rate environment, because I know the Fed's expected to raise rates 3 more times this year and possibly even continue raising rates into Q1 and Q2 of 2023. So the way that I'm positioning my portfolio is I'm moving from your typical growth stocks, the stocks that have outperformed in the past, 5 to 10 years, really. I'm starting to move away from allocating my dollars into those growth stocks, into consumer staples, right? Into defensive sectors of the market. And the reason why, for me, my reasoning for that is simple, okay? Consumer staple companies and defensive companies are companies that are what we refer to as non-cyclical, right? What that means is we measure how cyclical a security or a company is based on how sensitive it is to the economic business cycle, right? We have contractions, periods of economic contraction, periods of economic growth and expansion, then we hit a peak, then we start to see some slowing, then we see contraction, then we're in a recession, right? So that's the general economic business cycle. Now, non-cyclical companies, right? Non-cyclical companies are companies that are going to outperform. Now, I'm not gonna say outperform, but they're companies who are going to perform adequately regardless of where we are in that up and down economic cycle, right? So for me, I'm starting to purchase more of consumer staples like healthcare companies, right? Food and beverage companies, health and hygiene companies. I'm not, once again, I do want a disclaimer. I am not a financial advisor. This is not financial advice, right? Do your own due diligence. I'm just sharing with you guys some of the ways that I'm thinking, because I think as elite millennials, we should always be thinking about these things. So like I said, stock market performance has been choppy. It's been up and down, largely due to obviously record high levels of inflation, also the war in Russia and Ukraine, and also COVID-19, right? These things are obviously putting a lot of pressure on the market. It's been extremely volatile. The way that I'm choosing to deal with that is to allocate more of my capital into non-cyclical, defensive, and consumer staple companies that have low betas, and companies that aren't going to actually overreact when the market takes huge swings. And I think it is interesting that when you look at the top performing sectors, most of the sectors, in fact, 90% of the sectors are down year to date. The only 2 sectors that are not down, don't quote me on this, but I think it's consumer staples and utilities. Those are the only 2 sectors. Oh, and energy. Obviously, the energy sector has outperformed as well due to oil and gas prices being out the roof. But those are really the only 2 sectors. Consumer staples and utilities are really the only 2 sectors that have a positive rate of return year to date. So I'm allocating more of my capital to defensive and consumer staples to bring some safety into my portfolio. Yes, I still do own growth stocks. Yes, I still do own the blue chip growth stocks that everyone knows and loves. I still do own some of those, but I'm starting to reallocate to more of a consumer staple defensive based allocation, okay? So that is my perspective on the stock market. I do think things are going to continue to contract as the Fed continues to raise rates. I think it's basic economics, right? As the Fed raises rates, money supply begins to contract, things become more expensive. You want to go to your companies that have proven business models, that have consistent and steady cash flows. I think that's the safest bet. But once again, this is not financial advice. Make your own decisions. Moving into real estate, right? Real estate, same thing, right? The Fed's raising rates. Mortgages are becoming more and more expensive to finance. Debt is becoming more and more expensive to finance, right? That means we're starting to see slowing in the real estate market as well, because the more expensive financing a mortgage becomes, the less people available in the market who can actually finance and service that debt, right? So I'm expecting a pullback in real estate, especially here in San Diego. San Diego, the real estate market has been on fire. I'm expecting a pullback in real estate. And as I mentioned to you guys, one of my goals within the next 2 years is to buy my first investment property, okay? That's one of my goals. And I think now is the best time. It's almost like the world has come together. You know, the gods have like made this all possible, because I do think what we're already starting to see is mortgage loan originations are starting to decline, right? We're already starting to see demand in housing decline as mortgage rates increase, and the Fed, like I said, is expected to raise rates 3 more times this year and possibly into 2023. So these contractions are only going to continue to accentuate, and that's my perspective. Once again, do your own research. And because of that, right, because the demand is going to start to slow down, we are going to start to see how prices on real estate begin to contract as well. And as a first-time real estate purchaser, I don't know if some of you guys may be in the same boat as me, where you're looking to make your first purchase soon. This is good news for us. So I'm positioning and I'm saving and I'm preparing to buy my first piece of real estate in Q3 or Q4 of next year, right? That's really the goal for me, maybe even Q1, right? But we'll see. I think the market's preparing to be very, very suitable for that purchase. So very excited about that. I'm gonna leave you guys with that, man. These are my expectations and my forecasts of the market. This is what I think, and this is how I'm kind of positioning my investment portfolio and also some of my financing goals, right, when it comes to real estate. This is what I'm preparing for, and I really want to know what you guys are preparing for as well. Comment below, let me know whether you think my viewpoints are skewed, maybe I'm missing something, maybe there's some data I haven't seen, but I really want to share that with you guys. And the reason why is, once again, really I want this channel to be about young men pushing and motivating to become successful, right? Not even that's as a push, right? But just making the right decisions that are gonna lead us down a path of success, all right? Whether that's investing, real estate investing, retention, right? Relationship-based stuff. I wanna bring that content to you guys, and this is just kind of my day-to-day thing. So I wanna bring that to you as well, so we can be on this journey together. But there you guys have it. Once again, like this video, please comment. More videos coming soon, because I finally took the CFA and now I got some more time on my hands, so I will be making more videos. But like, comment, and subscribe. Your boy Ra Ray. Peace.